think about what that growth upgrade means for Albemarle. They're saying that demand growth for lithium will grow by 45% this year. So that effectively, over the next 10 years, we will be using 2 million tons a year more lithium in 2035.
That's crazy.
That's 10 SQM Atacamas. That's 20 green bushes.
Welcome back to this week's Rockstock Recap. It is Thursday, August 6th, and I just listened to a very bullish Albemarle earnings call. And tomorrow, the Trump administration is expected to host a series of critical minerals events in Washington, with reports indicating that President Trump himself may participate. I'll be watching to see if new tariffs, government-backed strategic mineral deals, or expanded export restrictions will be announced. But broadly, tomorrow's event, in addition to recent government restrictions on black mass, the Pentagon's new critical minerals sourcing executive order, recent Department of Energy financing announcements for grid batteries in Puerto Rico, and EnerSys for military, have brought critical minerals back into the headlines in recent weeks after many months where the Iran war has dominated. We also saw the Defense Logistics Agency tender to stockpile $300 million of lithium carbonate, a tender which ultimately proved unsuccessful, which I read as further evidence of a tight lithium market. We'll talk today about Matt's Buy the Dip blog published earlier this week, which followed our somewhat dour Summertime Blues episode last week with Thomas Nadrowski, following 10 weeks of sell in May, go away, critical minerals trading dynamic. And to help us unpack events in Washington, we welcome back Steve LeVine, editor of The Electric, and one of the most thoughtful voices covering the battery supply chain and the geopolitical competition between the U.S. and China. Steve wrote a piece this week arguing that history suggests the biggest winners in technological revolutions aren't necessarily those who invent the technology, or even those who manufacture it, but those who build thriving economies around the products that technology enables. It's a provocative framework for thinking about batteries, AI, and critical minerals. Is America pursuing the right strategy? Is China? And are both countries becoming so focused on controlling supply chains that they're missing the bigger economic opportunity? Following our discussion, stay tuned for a short interview we did with First Phosphate's John Passalacqua following another financing with the Canadian government. And also look out for an upcoming interview next week with Anson Resources' Bruce Richardson following a flurry of news flow, including the potential for over $300 million in financing support from the Utah government. Before we begin, a reminder that RK Equity is an advisor to and holds equity interest in some of the companies we may discuss today. But we are not, of course, financial advisors. This video is for informational purposes only and should not be considered investment advice. Please do your own research and read the disclaimer at the end of this video. I'd also like to thank our sponsor, Clean Elements, an investor group focused on providing growth capital for critical minerals developers focused on the energy transition. Clean Elements has invested over $30 million to date and is currently the largest shareholder of both Galan Lithium and Noah Lithium Brines, two companies developing high-grade lithium brine projects in Argentina. And with that, Steve, welcome back. Before we dive into your latest article, tomorrow could be a very important day in Washington. What are you watching for most closely, and what do you think could be meaningful versus just more political theater?
Yeah, thanks, Howard. Thanks for having me back. The direction that the administration has taken in recent months and recent weeks really has been hawkish on China. And so what I'm looking for out of the, not necessarily what I agree with, but what I'm thinking is going to come out of the meeting is more sort of drum beating about the critical nature of the U.S. having its own supply of critical minerals and rare earths, and processing of these minerals. I hope that they frame this around the U.S. and allies, which was the Biden era approach, and some of Trump's advisors have advocated this. I mean, the critical minerals do not have to be mined and processed in the United States. They can, be done in any country with which the U.S. has a close relationship. That's how I'm looking. Yeah.
Okay. Do you have? Let's dig into your article a little bit. I'm not sure exactly what I'm looking for, to be honest. Like it appeared, this event. I just noticed the things that I mentioned. There just seems to be renewed focus and activity, and I listed them in my intro. But in particular, I've been encouraged by what I'm seeing on batteries. I tweeted about this thing in Puerto Rico, as a Department of Energy loan. I think it was originally meant to be a solar plus batteries, and now maybe it's a natural gas plus batteries, but the battery component was written about in the White House press release, right? So we've been making an argument, for a long time that batteries, the Trump administration has not been supportive of batteries because it was perceived to be, for sissy EVs, right? Or, tied to solar. But increasingly, the government's recognizing batteries' critical importance for grid reliability and, military, and affordable electricity. And we're going to play some clips later in this segment as well. Tesla had, during their earnings call, it was kind of lost in the shuffle. There's been a lot of focus on SpaceX and the stock, stock's been going down, both Tesla and SpaceX stock on Twitter and elsewhere. The talk is, highly conflicted, but lost in all of that kind of discussion was something, 5 years ago, Tesla was talking about lithium, and they were talking about, spodumene, software and software margins, and please build refineries and the like. And we haven't really heard him talk that much about it, but he talked a lot about batteries, mega packs for AI, solar. So listen to these clips as well as the ones we took from the All In podcast. Chamath Palihapitiya, is on top of this. So I just think like batteries for the future of AI, military, and affordable electricity are increasingly, we've been talking about it for 2 years, but it's not being reflected in the equities. And Matt will talk about, your comment about ESS off the charts. And that was very much a component of the Albemarle news. But before we do that, Steve, let's talk about what did you write about in the article? Like what's the crux of your argument?
Yeah. We can combine the politics about on critical minerals and the article because they fit together. Critical minerals are a national security issue, right? So the U.S. and Europe, but we're talking about the U.S., should have its own supplies of what it identifies as metals and minerals that are critical militarily, but also to whatever industries the U.S. Wants to prioritize, and that means by access, it should be an allies and all approach to that. What I'm arguing, however, in that article is that history shows we should not replicate, we should not seek to replicate the Chinese supply chain, its control over critical minerals and processing of them, and the production of lithium-ion batteries. We should have a lithium-ion battery industry and a critical minerals industry, but the economic and geopolitical and financial upsides are in taking those general purpose technologies and the ingredients that go into them, and creating higher value products from them. This is a process that takes years and years and decades really to play out. We're at the very beginning of this stage. Electricity, the paramount example of this is electricity. The creation of electricity as we know it, used for light and power and so on, 1880s. It took 4 to 5 decades for electricity to actually get into the economy. It was the 1920s and the 1930s when we finally had the boom in electric appliances in homes, the powering of the major cities in the United States. It was only in the 1930s and 1940s when the electricity began to really stretch into rural areas. Electrification is still working its way through the global economy now. China's greatest, arguably, strength right now is that is its electrification. It's 10 sizing of its electric grid over a matter of a few years, and outdoing the United States in its access to electricity for its AI data centers, for example, but also all kinds of factories and grid use. The U.S. Conversely is way behind in adding capacity on its grid, and the condition of the grid, and this is what I'm arguing puts the United States really on its back foot economically. And so, to sort of summarize all that, the U.S. in competition with China, the best thing that it can do is embrace China's dirt cheap CATL batteries, bring them into the United States, and use them in our manufacturing, our factories, our AI data centers, added value technologies made from these cheap. Let's be grateful to China for driving down the price of the batteries, of the critical minerals and processing that goes into it, and use those to our benefit. And on the electrification side, like, we really need to to figure out probably using batteries to increase at least double or even triple the capacity we have on the grid.
And to be fair, that's what most of the other countries in the world are doing. They're using cheap Chinese battery imports to effectively power their economies going forward. And is your contention, Steve, that the US should be importing batteries from China, or that it should encourage Chinese cell makers to set up shop in the US and produce batteries here, or produce batteries in the US to be used in the US?
Yeah, it's a split picture. So it's both, right? So yes, CATL and BYD and Goshen, yes, should be invited to do their thing here, but we also should be importing. Our default response to China should not be banning of these technologies. Cars also, right? So it seems reasonable to ban or not ban, to have high tariffs on Chinese vehicles, but encourage those companies to build their plants in the United States. Matt, we've been hearing since the 1980s from the from Detroit, right? How they can't compete with the latest Asian car company and their subsidized products. And okay, guys, it's 50 years, right? So it's time already to be able to compete. I think those cars should be BYD and Xiaomi and Xpeng and so on should be encouraged to build their plants in the United States, show Americans how to develop a car in 18 months on the battery side, teach Americans how to make LFP.
It seems very much like what happened with Toyota and the Japanese car makers in the sort of 60s, 70s. Initially, there was lots of resistance, and then eventually America invited them to set up shop in the States. And since that happened, America hasn't sort of looked back really, and they've utilized some of those technology advancements in the American industry. So yeah, I mean, I'm fully in agreement with your conclusions, but the question is whether the White House is in agreement with those conclusions, and it seems at the moment probably not.
Steve, I don't think cars separate from batteries, right? That it's a different thing, firstly. And importing cars, I think no chance from a Chinese perspective. But and you and I have been in agreement a fair bit, like saying, hey, the midstream cathode, BYD, Trump on the campaign trail suggested he would welcome if they kind of came in. My reading of the political tea leaves, and most recently at Fast Markets, I spoke with some people who are very connected, in Washington. And the first thing you said today was that there's a very hawkish on China, dynamic, coming into tomorrow. So I think politically it will be problematic, certainly going into the midterms, and Xi is coming here. Like, I thought we had 15 U.S. CEOs go to Beijing. Might we have CATL, come with Xi Jinping in September, right? And a few other CEOs. Again, people who are more knowledgeable about Washington than me, they said NFW, right? But, we'll see. But your broader point, okay, that yes, we need the downstream, like batteries are electricity, but electricity is just an enabler of all these other great things. And we need to focus on those things, not just necessarily having complete, resiliency, right? But we can't be overly reliant. Like, we can't just say, oh, CATL, import your batteries into America, because unlike Korea and Japan, which are largely democracies, right? China is not, and China is much more of a rival than an ally than Korea and Japan. And for the last 30 years, we thought like the globalists, the globalization was less like, okay, trade with China and then they'll become more democratic. That really hasn't happened. Like that philosophy has been thrown out the window. So we're going to be much more wary about China than just emulating, the Korea-Japan model, in my opinion. But your point, there's a new report out from the Council of Foreign Relations that's talking about the equity stakes that America's been taking. We'll put a link in the show notes to it here. But they had an earlier note this year where they were arguing we shouldn't copy China, we should leapfrog China, right? And Mariana Minerals was on the tape today getting $310 million. And there are some Silicon Valley backed private companies that are trying to, kind of leapfrog. I've been more of the argument, copy paste what China, Korea, Japan, are doing, right? Like, SK Innovation, Samsung, Panasonic, support these companies, like support batteries, right? And just use existing technology rather than, we don't necessarily have to leapfrog because the existing technology has now become so cheap, and allow
we've
CATL.
seen that also in the industry. I mean, wherever we've tried to recreate technology or reinvent or invent technology, we failed. I mean, you just need to look at the number of battery failures around the world.
Right.
Northolt, I mean, I could count 6 or 7 companies that have gone bust trying to develop a new battery. So yeah, it makes sense to use existing technology. Same thing in cathodes, etc. as well. So yeah, upstream and in the battery chain, it definitely makes sense to use technology rather than try and knock it out of the park with a new technology.
I'm agreeing with you, but there's this kind of like American thought, like we invented LFP, like we'll do, if it's LMR batteries, leapfrog, right? So there is a debate, and this was a debate when I moderated the panel at Fast Markets, leapfrog or copy paste, right? I'm more, we could do both, but you cannot, they're so far ahead and the prices are so low and they're proven, right? Just like the lithium-ion battery has been around for 20 years. You don't need to leapfrog the lithium-ion battery necessarily. To your point, Steve, copy paste, right? Like let's it enables so many downstream technologies, and that's what's happening with AI, right? And all of the your point was China is so far ahead on electricity, and Elon, when he did his interview with the Economist woman, was basically saying, we're ahead in AI, but they're way ahead in electricity, and they could surpass us, right? So
Yeah.
there's not
they catch up as well. I mean, I used to cover silicon carbide semis when I was on the buy side, and one of the things that was really, really noticeable was that 6 or 7 years ago, China was massively behind the US. Now they're equal. So they innovate very fast as well. And I don't think that should be sort of underestimated. But it's very interesting when President Trump was standing for election, I don't know what it was, 18 months ago or something, and he was talking about, make America great again, invest in America and everything. I was like, this is great. He's going to encourage Chinese companies to come and set up in the US. He's going to build an American industry where there wasn't one before. He's going to invest in minerals in the US and help to generate an entire supply chain for this industry. And then it didn't really happen. It went so far off, out of sort of sync to make, to try and well, first of all, to push renewables and batteries and everything out of how he saw America going forward, and then to tariff everyone else out of the American market. That it didn't really happen, and I kind of feel it was an opportunity lost when he came in. I genuinely thought from some of the things that were being written before he came into power, this is great. This is going to be really great for America. But now I increasingly feel that they've gone too far in a direction that's actually making it bad for America and bad for American industry.
Yeah. So Tesla has started making LFP cells, and so they've got a lithium processing unit down at Corpus Christi. They're making their own cathodes in Austin. They're making their own LFP cells, which no one else is doing, and the mega packs. So that's a model of how the U.S. can encourage a native industry at the same time of taking advantage of, and that can be our
modus operandi
account, right? That we've got, our own industry, but meanwhile taking advantage of these cheap batteries coming out of China and encourage, right, the tax policy that encourages the value added industries after that. In terms of leapfrogging, absolutely, we can do several things at once. We can keep encouraging the next generation batteries and the components that go into them, but then encourage that we ensure that those are manufactured in the United States.
I agree. I agree with you, Steve. And to your point, Matt, 18 months ago, that was the whole grand bargain, discourse, right? And Steve and I were talking about that, a lot. I still believe there is a grand bargain. It's happening, right? Like he was in Beijing in May, and she is going to be here now in September. And, he's ratcheted down the pressure to some degree, right? But so I don't know what the grand bargain is. And also in the first year, Matt, I was frustrated as well. They did preserve batteries in the one big beautiful bill, but they did get rid of the demand support for EVs with the 30D credit, et cetera. So he needed to, in the first year, it was all about energy dominance. It was all about, Chris Wright and nuclear and oil and gas. And, he needed to implement his campaign promises, right? So he went from anti-battery to kind of neutral battery. Now I hope he's moving in the direction of pro-battery. And because they've kind of woken up to the fact that we need this electricity, we need to win the AI race. And, China's basically squeezing us by weaponizing, certain materials. So like there's still, don't give up, Matt, is what I'm saying. And to my point, and I agree with your point, Steve, that we can innovate and copy paste. What I'm saying is that there is a cohort in Washington of think tank, smart people who says, no, don't copy China. Leapfrog. We'll innovate. There's all this we'll innovate our way out of this. And I'm saying that's wrong, right? We need to do both.
Yeah. So that is chest beating kind of feel good virtue signaling. We're doing
exactly.
A lot of stupid things. That's one of them. And we've got to get our.
I love the way you pull your punches, Steve.
We need to get our act together to focus on the right things. Right. We're by focusing on that we're going to win if we have critical minerals. No, that's not the winning game. And neither is a ban on the batteries. Neither is a ban on the AI models coming out of China. It's what is the next stage? What is the value added? How do we then take those things and just on steroids build products from those products, those essential components and ingredients.
I think this sort of what you're arguing is kind of being illustrated in the EV market at the moment, because of obviously there are no Chinese EVs in the States, but Chinese EVs have almost single-handedly, pushed EVs into the mass market, not only in China, but increasingly in the rest of the world and in Europe. And, you're seeing stronger EV growth in rest of the world and in Europe than you're seeing in China at the moment. That's happening because EVs are in the mass market. We haven't gone through this multiple iterations of, we're going to make EVs, but actually they're really expensive. And then we're going to make them slightly cheaper, and then we're going to make them slightly cheaper. EVs just went into rest of the world at cost parity with ICEs. And as a result of that, they're growing very, very rapidly indeed. And I think, that's an indication of, what you're arguing here, that if we don't fight against China, we can actually benefit from their technology.
Yep. Yes. And what I would love to hear out of this critical minerals summit tomorrow. Trump supposedly is going to attend it. I would love for him to say, we're going to rebuild our grid. Like, that would be like the biggest
I
most
think
bullish signal he could give.
everybody would love that. We've been talking about, I've been on the edges of the industrials sector for 20-25 years now, and I think we've been waiting for the Americans to start rebuilding their grid for about 20 years, and improving electrical infrastructure and transport infrastructure, and it's never happened in those last 20 years. So, and I mean, it would really fit in with his indicated approach, because it's making America great again, investing in some of these very elderly grid structures, investing in transport. That's got to help with efficiencies for the rest of the American industrial complex, you would think.
It is happening. He's making the hyperscalers do it, right? You got to bring your own power, right? I forget what the ratepayer protection program.
But
right?
it's not just for hyperscalers, it's for the rest of the industrial grid as well. That's what's absolutely key.
Yeah, yeah. And and just speaking to the this podcast audience, one way of doing that is to, put the the BESS industry itself on steroids, and installation of mega scaling battery backup and base power on grids around the country.
Well, as I said, let's use that, Steve, as a segue into this these clips from the Tesla quarterly call and the All In podcast, where they talk, just about that. So stay tuned and listen to these 4.5 minutes, and we'll continue after that.
The energy business is also growing incredibly fast, and I think will be crucial for the scale up of artificial intelligence data centers.
In Q2, we deployed 13.5 gigawatt hour of energy storage, a 53% sequential increase, and the second largest quarter for energy business.
We will soon start production with Optimus. We have started production with the Tesla semi-truck. We will soon start production with Megapack 3. We've started production with the lithium refinery, the cathode refinery. We're scaling up battery cell productions, and we're also preparing to do a massive solar cells and panel production. This is going all the way from silicon refinement to producing the solar cell and then deployment of solar, because there's going to be tremendous need for electricity in the future due to electrification of transport and AI, obviously.
The amount of solar manufacturing which happens in the US, we're just going to multiply it with an order of magnitude.
There's far more power available from the sun than anything else by far. And power constraints are a major issue for AI. The solar battery combination will be how the vast majority of energy in the world is produced in the future. That's already, of course, how all of the Starlink satellites are powered, is with solar panels and batteries. It's not just peak shaving, but it's also grid balancing. For balancing power from wind generation and solar generation, batteries are awesome. In fact, probably the best way to scale total energy production in the United States is simply using batteries, because there's, I think, around 1.2 or 1.3 terawatts of power production in the US, but the average power usage is only half a terawatt. So you've got 2.5 times as much power generation as the average usage. That means you could potentially double the energy output of the United States just with batteries. The AI compute demand is so high that even the hyperscalers are having trouble turning on their AI compute and finding the power and then smoothing the power, especially for the training runs where the power cycles dramatically in a very short period of time can drop by 70% per 100 milliseconds. And you really need fast acting advanced power electronics to be able to smooth out these massive changes in power. And that's why SpaceX has bought so many megapacks for the data centers. It's actually mostly for smoothing out the power for the training runs. But it will also be useful for being able to tap more power from the grid by, if you tell utilities that they will not need to supply power during the worst hours of the worst days of the year because the batteries can handle it, then that makes it much easier for them to give you power. So we see demand for Megapack being very high in the future.
As important as the Iran conflict is, the reason why energy prices really haven't moved that much is because most people have already begun to shift the incremental generation to these renewables, and specifically to solar. I don't know if you guys saw Elon and Vaibhav, who's the CFO of Tesla, in their Q2 earnings call. It was the craziest thing I had ever heard. they said, well, I think we're just going to increase the production of solar in America by an entire order of magnitude. And somebody said, what does that mean? He goes, we're going to take it to more than 100 gigawatts a year. And they're going to vertically integrate. And so they're going to crush the price of all of this stuff. And they're going to make so much energy, and they're going to make it completely abundant. So that's a productivity boon that isn't factored into what we project. And then I got the updated data just to back you up, Friedberg, on one thing that I think it is just so crazy. Yeah. Do you guys know how short America will be on electrons by 2050? How massive the electricity deficit will be by 2050? I got the numbers wrong. I'll tell you what the numbers are. We will be 1.7 terawatt hours short by 2050, which is, when you calculate it as energy, it is 6x of California's entire energy consumption. 6 California is short of energy.
I would argue that's probably undercounting. That's not even counting robots. If you've got to power up every robot with a battery.
If you want to be levered long, go long electrons. Get long electrons any which way you can. Bank them, store them, and resell them.
Okay, and we're back. So that was, a lot of good, support there for batteries, right? And Matt, the mega packs and the bring your own power and the gigawatts of electricity that are necessary and catching up with China, et cetera. Matt, why don't you talk about, you put out a buy the dip note, right? And then I reported on Albemarle's earnings, which were all about off the charts, battery energy storage growth, which we've already been flagging a couple of weeks ago from CATL's results, and then the week after that with Samsung, SK On, and LG Energy Solutions earnings results, all showing big profitability because of BESS. The best is yet to come has become my new mantra.
Among others. I think I flagged it in my quarterly presentation that BESS cell production has been very strong this year. I've talked about concern about inventory build in the BESS supply chain, but I also noted that installations ticked up in June quite substantially, and that took a lot of my concern away about the inventory build in the BESS supply chain. The results we've seen, the numbers we've seen out of Albemarle, out of CATL, out of the Korean cell makers, all indicate really, really strong activity in the BESS space. And I just don't think that's getting picked up by the market. I've talked about the lithium carbonate inventories in China several times over the last 3 or 4 weeks, falling very, very rapidly, down by about sort of 20+% over the last 4 to 6 weeks. That's a really substantial move. And we're down to what, 3-4 weeks of inventories maybe in lithium carbonate in China. The Albemarle results are implying that we're down to practically 0 weeks of spodumene concentrate inventories in China. So we are really seeing pretty robust demand in lithium at the moment, and it's not really being carried through into the market. So I think for me that is a really important takeaway, and I know to some extent we're preaching to the converted with our listeners, but certainly there have been some concerns about the technical analysis in the GFEX lithium futures, with them moving below 140,000 renminbi a ton over the last couple of weeks. But I think this is a situation for me where the fundamentals trump the technicals. Yes, we did have a little bit of a weak July on lithium futures, but certainly we're hearing at the moment that China is coming back with a vengeance in terms of trying to pick up lithium supplies from overseas. And to me, that indicates that we could have a very, very strong cycle indeed over the next sort of 4 to 6 weeks or so.
Matt, very much, reinforcing that this call was very bullish. I mean, the stock, Albemarle stock, opened up 8%. I don't know where, maybe it's up about 5%. But they said repeatedly, right, that the physical market is very tight. And one person asked them about, they also talked about Zimbabwe supply being slow, Jiangxi, like CATL's Zhangzhou lepidolite mine being slow, and even their own green bushes, CGP3 having a fire, and that was ramping up, and now that won't ramp up until Q1 of 2027. So they're talking about like their production is flat year on year. This is the biggest producing company in the world, and they're talking like maybe single-digit growth of their supply, right, in a market where BESS is growing 45%. They had put this range, if you remember, they had forecast lithium demand was going to grow 15 to 40%. It was a very wide, amount, and it's like on the high end of that range. They have upgraded their long-term low-end forecast by 100,000 tons, I think, like from 2.8 million to 2.9 million tons in 2030. That's still low end. The high end is 3.6.
For me, and I'm sure I speak for YJ, I wouldn't want to put words into his mouth, but that's still really, really low. I just wanted to think about what that growth upgrade means for Albemarle. So they're saying that demand growth for lithium will grow by 45% this year. And I think, I was pretty much an outlier expecting it to grow by sort of 20 to 25% this year. What the difference in that base effect means for the industry. So that effectively, over the next 10 years, that means we will be using 2 million tons more lithium in 2035 than we previously thought, if demand growth rates stay the same. Think
That's
about
crazy.
that. 2 million tons a year more lithium. That's 10 SQM Atacamas. Okay, that's 20 green bushes at current production levels.
And that's why Albemarle kept saying demand stronger than supply. But in the very short term, right, they're saying, look, at $20,000 a ton, that's a healthy market, right? It's not incentivizing a lot of speculative supply, right? But it's incentivizing like high quality projects. But they're not rushing to do anything. Like their balance sheet's much better. Their cash flow generation is much better. They've talked about, okay, yeah, we may brownfield expand, at Wodgina, okay? And they spent a lot of time on DLE in Chile, which I think is interesting. Just a quick aside on that. They mentioned, they used to talk about this like yield improvement project, right? Like they're currently producing at a yield of only 30%. That yield improvement project, they said got them 50 to 60%. They've now said that they've been piloting 3,000 hours 1 year, okay? They're getting 90% recoveries, right? But they're not ready to implement this, but they are talking about like, we could have 6 trains of this, okay? But they're going to modulate. It just reminded me of like Kemerton trains, 4 trains. They talk like 1 to 6 trains. It's still early days there, but this was the first time like I heard them detail this in a while. And we saw EnergyX recently got, 225 million into their Chilean project, right? It's further supportive of DLE is, the majors are talking about DLE, the Standard Lithium, Anson, and other companies that we've talked about. Vulcan got a board member this week, Amanda Lacaze, the CEO of Linus, very strong appointment, to that board. But all of these tons are going to be needed to meet what you just said, Matt, in 2035.
Yeah, I mean, it comes back to that exercise I did earlier this year for one of our clients where they said, well, you're really bullish on demand in 2030, 2035. Where is that incremental supply going to come from? And frankly, to flex my model, 50% of the DLE projects that we know about at the moment had to come on to hit that supply level, and 50% of the sedimentary lithium projects had to come on, as well as a huge amount of the hard rock and brine projects that aren't funded at the moment. So yeah, I mean, if we're going to hit those sort of demand levels that are now more common in people's models, we need to see prices at a higher level than they are now. And by the way, that doesn't mean that prices need to be $50 a kilo. But as long as prices are above, $27, $28, $29 a kilo, that is probably the incentive price for the bulk of these new projects to come on. And we need that, and we also need the equity market to come in and play as well.
Well, on those points, Matt, Albemarle had this, their scenarios, the $10, $20, and $30 scenarios. I think previously they had like 9, 12, and 15. So they brought back the $30 scenario, and the $30 scenario was the average price from 2021 to 2025, right? So the prices we had last year and the last couple of years were artificially low, right? Obviously, 80,000 was artificially high, but it's not at all, illogical to think, or I think a more likely scenario is that the next 5 years will mirror the last 5 years, which is $30,000, right? And if you do that, if you look at the sensitivity analysis of Albemarle's earnings growth, the unbelievable operating leverage. They're going to have mid-60s EBITDA margin. They already have mid-50s. They'll be mid-60s just at 30,000. And we've talked about this. Like, we think lithium should trade in a range between 20 and 40,000. And when we talked about the strategic lithium reserve, if it got to 40,000, that's too high. That could hurt battery costs. And
by the way, at $30 a kilo, that doesn't hurt battery costs.
Exactly.
The industry should be able to cope at $30 a kilo. You won't see demand destruction in cells at $30 a kilo. Getting there north of 40, but certainly not at $30 a kilo, whereas $30 a kilo is enough to basically hit the incentive price for 90% of projects that are currently considered.
And to your point on the GFEC speculation, there was one question and they didn't answer it, but the questioner was like, why have prices been going down lately, right? Like drifting down, right? And then they talked about the speculation in the market and other things like that. But, and you've looked at the technicals, Matt, you said if it went through 140, then it can kind of trade down. But I feel like the fundamentals, this could easily get to $30,000 before the end of the year, right? It seems to me, based on all of this. And if that's the case, then lithium equity is off to the races, and some of these more speculative projects, right, will, at $30,000, a lot of projects work, right? At 20,000, much harder to get financed. So, okay. Speaking about financing and speaking about sediments, on the tape this morning was Lithium Americas doing yet another financing, right? Like, I thought they were fully funded, to be honest, right? Like, we interviewed John Evans, and this is not a ding, like, we love you, John, and we like Lithium Americas, but they did a convertible with Yorkville, which, and Goldman Sachs advised on this, right? So I'm not sure. They did flag that I think the tariffs are impacting supply chains, or maybe Iran war supply chain, but, it was just on the tape today, but 2 days ago, as an alternative, right, Lithium Argentina did a regular debt financing at interest, no convertible, no equity, at an interest rate lower than U.S. Treasuries, 5%, right? So I'm looking at LAR, LAC. We've talked about this, right? People still think that they're kind of somehow connected, but they're not anymore for 3 years, 2.5 years. I feel like 10 years ago, when I represented Lithium Americas and they merged with, the Argentine asset, and it was 150 million market cap, we were telling people, that the market's coming, right? Now the market's here and continues to grow. The magic of compounding, Warren Buffett, compound interest, right? To your point, growing from here, right? But they're producing 40,000 tons. So this financing that Lithium Argentina did was to, in connection with financing stage 2, which is 45,000 extra tons on top of Caucharí-Olaroz 40,000 tons. So a doubling of capacity, they haven't made an FID of that, but that's kind of coming. So a company that's 40,000 going to 85,000, yes, they have only 45% of it or thereabouts. And then they have the PPG, but from a growth perspective, Albemarle's looking good, but they don't have very much growth, right? Lithium Argentina, it's a tale of two companies. As you're looking at the scoreboard, the ARC Equities scoreboard and the valuations, I still see Lithium Argentina as trading at replacement value, right? And with no equity dilution anywhere on the horizon. And you get PPG for free, which is another 100,000 tons, and they have like a third of that asset, partnered with Ganfeng. So anyway, any thoughts on that? And then I want to turn a little bit to another financing, which I mentioned earlier, which was this Mariana Minerals.
Well, it sort of does come back to this issue that I was talking about over the last couple of months, which is, I'm looking at lithium companies that are effectively cash machines, companies that are low-cost producers, bottom of the cost curve, that are just churning out cash. And Lithium Argentina was one of those. PLS is another one of those. Green Bushes would have been one of those, but they're having a few sort of operating issues at the moment. But yeah, I mean, there's like, 4 or 5 of these companies out there that look crazy cheap on cash flow multiples. And yeah, I mean, fine, into a rising lithium price environment, maybe you want to go for stuff with operating leverage, but I also want to go for good quality companies. And you want to go for good quality growth companies. And certainly, Lithium Argentina and PLS both stand out as companies that are really low cost assets, but also have growth potential.
But we do have Lithium Argentina as well as Sigma results coming out. These stocks have been smashed, and a lot of things have been hit, right? We're still in the summer doldrums, but the vibe is better.
Yeah, I think that if you look at the last cycle this time last year, the producers went first, but then some of the developers started to go afterwards. And I think there's 4 or 5 really good quality development stories out there. Q2 is one of them. I think Wildcat is very interesting in the Australian market. There's various other ones. So I think that I think for me, lithium just looks extraordinarily exciting just at the moment. It doesn't have to be hard rock. There's some great DLE opportunities out there. Anson, Standard Lithium. There's some really interesting sedimentary things out there. Surge stands out for me on the sedimentary side. So yeah, I think there's some really interesting opportunities in the market at the moment.
Okay.
No, not advice, by the way.
Not advice. Yeah. So in your blog on the Buy the Dip, you said seasonality, also about uranium. I want to talk about that in a second. But first, I want to talk about this Mariana Minerals. So they raised $310 million there's a private company founded by Turner Caldwell, who worked 10 years at Tesla after graduating, Stanford mechanical engineering. But he was on stage at Battery Day. I've had some interactions with him because he was, who a lot of our clients were, talking to, and he was doing due diligence on spodumene stories, nickel stories in Minnesota, Talon Metals, et cetera. And then I saw him again at the Metals Company conference or whatever, in Strategy Day last August. And he was on stage there, and they have signed an MOU with Mariana. So like, what is Mariana Minerals, right? They have a copper project in America. They also have a lithium project. The copper project's, on, producing now. The lithium project, they're saying, is going to be Q1 of next year. And then again, they have this MOU, but they're all about software first, right? And cutting costs, like faster and cheaper, American. This is the, to the point we were making, Steve, leapfrogging, right? In mining, right? Using Tesla mentality, mechanical engineers, instead of applying it on Wall Street, financial engineering, or applying it at Facebook, figuring out how do we, click on more ads, using Elon Musk's manufacturing stuff. So Turner's of that ilk, right? And there's a number of other people who have left Tesla, like Redwood Materials, JB Straubel, and Vivas Kumar at Mitrachem, who are trying, their hand at this. But the point is, from a cost to capital point of view, there's something you referenced earlier, Matt, right? A private Silicon Valley, knowing how to talk, knowing how to like software first, right? He got a $1.5 billion valuation, raising $310 million, right? For, still a startup. And it's backed by Andreessen Horowitz and Breakthrough Energy Ventures, as well as, the CIA's venture capital arm, InQtel. So anyhow, I'm looking at the dichotomy of like pockets of money, right? Silicon Valley, like bets on the future, high valuations, good storytelling, but they won't come in to public equities, right? Because that's not what they do. They're venture capital, right? Like, and here we are, what Thomas Nadrowski calls like our critical minerals, junior mining ghetto, right? That they operate under, different parameters, but it is what it is. But I think like the metals company, what they're seeking to do to disrupt, and Mariana Minerals might be, it's one of their TMC's options to build a in Texas, in Brownsville refinery to process the nodules, right? So I'm very much watching Turner. He's an up-and-coming star. He's 33 years old, and but this was an eye-popping, very ambitious company. But that amount of money at that valuation, just within 2 years since starting the company, very, very impressive, and would encourage our viewers to kind of follow him. Any thoughts on that, or Steve or Matt, and then we could turn to other topics.
I do. I have actually a question on that. So the multiple, right? The valuation you just described, and really, I think you're kind of, I think, dancing around it. Is that credible? Okay, you say that you're applying software, you're applying AI to mining. What is your smell test? And Matt, what's your smell test on just what you can do in terms of producing lithium? Because you've added, I don't know what does the software do, and the the valuation. What are you guys thinking?
So I was skeptical on the company Cobalt, right? That raised a lot of money based on, AI applied to, exploration. Okay. And then they used that high valuation and backfilled the valuation by actually getting conventional resources in the DRC and elsewhere. So the skepticism that you're portraying, right? It's case by case. Okay. In Mariana's case, I can't speak to the valuation. I don't know what the numbers are, but I did have a chance to speak to him at the benchmark event in June, and he's extremely impressive. And he kind of I was listening to the Elon Musk, Walter Isaacson book, right? Where his idea for, in SpaceX and getting the government contracts was that like they weren't competitive bids for SpaceX. Like he wanted we could build rockets better than you, right? Right. And embedded into the cost structure of the incumbents is this whole cost plus attitude, right? Everything's cost plus. Like if everything's cost plus, then like you have no incentive to kind of lower cost, right? So Turner was telling me like that's kind of his mentality, and that's how a lot of the mining industry works. Right. So I don't know how, if I could use like Lithium Americas as an example, and I'm not sure that this is how Bechtel works. Right. But Bechtel's a tradition. Like, why do costs keep going up? Is there some sort of like cost plus, element to that? Turner was also saying that a lot of the stuff they do, every item, every first principle, like everything that a mining company does, they report it by hand, then they put it in a spreadsheet. And, there are inefficiencies at like every micro task. And he's saying like with software, he's able to pull out costs, related to that. So I don't have, all of the answers here. Hopefully we'll have an opportunity to, speak with him again and get to the bottom of that. But there is an element in Silicon Valley, right? You did a valuation one time, you made some progress, and then you do an up round, right? Then you do another up round, and the funds who invest in that keep marking up the valuation of their investment based on a private market valuation. Like ultimately, a few years from now, we'll have to see what the monetization, of that is. But right now, hats off to Andreessen Horowitz. I remember Mark Andreessen during the pandemic, he put out a piece, it's time to build, right? Like, so there's not enough Silicon Valley attitude toward this halo heavy assets, low obsolescence industry. And the more the merrier. The more Silicon Valley could invest in these hard assets with, potentially disruptive technologies, we'll see. As it pertains to his specific projects, he has a copper project. The way he described it to me, it's working, right? It's making money. They've applied it there. Now he has, he's going to get lithium from water, right? Extracted water from various, I'm not exactly sure where it is. And I saw one comment from Chris Williams, who we've had on the podcast, saying that that it was 20 ppms in that. That's very low grade, right? So I don't know, right? So to be seen, but I wouldn't bet against him, right? So the answer is I don't know. I can't opine on the valuation, but I think it's a very good thing that entrepreneurs in the mining space can attract capital at lower costs of equity capital. And I would hope that would be mirrored in the public equity markets. The more we have events like tomorrow and like last year, when this was on the front page, a lot of stocks went up and a lot of companies were getting financed at better equity valuations. Equity valuations are still very low compared to SpaceX valuations or Tesla valuations or many other valuations. I still believe there should be a shift from highly valued, great companies, but fundamentally, to your point, Steve, we got to build the electricity grid. We have a lot of CapEx that needs to be spent here. And to do that, you need reasonable valuations. Otherwise, it's not economic. It doesn't make sense to build these things.
Probably a reasonable place to wrap up, eh? We hit the hour mark.
Okay, we have hit the hour mark, and we do have First Phosphate to follow this. So please stay tuned and listen to John Passalacqua following, an additional $4 or $5 million of Canadian government support. And with that, thanks, Steve, very much for joining us. And Matt, I wish everyone a nice weekend. Okay, and we're here with breaking news from First Phosphate. John Passalacqua, why don't you tell us about this important news that just hit the tape?
Yeah, so today the federal government of Canada gave a non-repayable, non-dilutive contribution to First Phosphate of $4.8 million. This is on top of the $16.7 million contribution that they gave in March. That was for the concentrator at the Baie-Jean-Lamarche mine to be able to go through its development process. Now, this $4.8 million today is for a power line transmission and also for road infrastructure. So it's basically the power that will go to the concentrator to make the concentrator happen, and then also the road that will go from the concentrator to be able to get the product to market. So it's a nice completion of the entire package, and it just shows how basically important the project is to the federal government of Canada and how they'd like to get the Baie-Jean-Lamarche igneous phosphate mine in development as soon as possible. So this is really key infrastructure that this is pertinent to the hydro line and also the road.
Excellent. So John, congrats on signing the agreements. How long have you been working with the government to try and get this sorted out?
Well, we're always applying and speaking to government on various levels. It's probably been over the last year plus since the Carney government came to power here in Canada that we've been working with them on the mine and the understanding of it, and how to accelerate it. So this is just one part of that.
Okay, and these are probably pretty key pieces of infrastructure: power line, road. Are these sort of make or break for the project? I mean, are these pretty significant?
Yeah, so generally, infrastructure is make or break for projects in general. If you can't get electricity, well, you can't really process in a clean way. And then, roads are important too, because if you can't get to the mine site to develop the mine site, and if you can't then get your material to markets, that doesn't work either. In the case of Baie-Saint-Lamarche, we know that the infrastructure is very simple. As you know, we are 70 kilometers from the deep sea port of Saguenay. We are less than 1 to 2 kilometers from main provincial state highway, and we have a power line pretty much within a few kilometers of the site. So it's not a question of whether this can be done. It's a question of how this will be done. So these two contributions sort of go into the road. Well, a road, it's a nice concept, but how does it get there? How will it pass? There might be 4 or 5 different ways to wind that road, which is the most environmentally non-sensitive, which is the most logical for the project, which is the best one in terms of transportation and routes and other cargo routes that are in the region of Saguenay, and what's the most efficient and the best one for everyone, for all the stakeholders. In terms of the hydro, it's in terms of how do we upgrade hydro lines if they're necessary? Where do we run the hydro lines? How do we make sure that they're all efficient? And so it's great. It's just the beginning of, just like when you develop a mine, now you're developing the infrastructure to the mine. How will all that look like? So it's all very complex. And these first and last mile funds, as they call them, are great because it just connects you to, the nexus, the heart of what's already existing in the infrastructure, and makes the project viable. So this should really be seen as a very strong show of support by the Canadian government, a very strong show of viability. That it is possible to connect the project to hydro and to road, and now we're going about doing that.
Okay, and I mean, by getting all this money out of the federal government, is the biggest story that the federal government is effectively endorsing this project, that they're endorsing it as a key strategic critical minerals project for the country?
Well, I would think so, right? If we've been provided funding to be able to develop the concentrator, and especially funding now to be able to develop the road to and from the mine and the electrical line that will supply it, obviously the government is signaling that they want this project into production as soon as possible.
So the Quebec government gave the project fast track status just last week. So what does that mean for the project now that you've got federal backing and state backing?
Yeah, so it basically means that the two jurisdictions are working in harmony to advance the project as quickly as possible. The provincial, slash, if you call it, state government, and the federal government both want this project into production as soon as possible. At the Quebec provincial level, that's where we have to go for our permits. That is an exceptional fast track that we got, because only 3 projects were fast tracked under this new status that the Ministry of Natural Resources of Quebec has begun, and we were one of the 3. So it shows that we're within their 3 priority mining projects. And what that does is it brings all the ministries of the Quebec government together to look at the project holistically, and to be able to reduce red tape, and to be able to advance a holistic view of the project in view of getting it into production as soon as possible.
So potentially all this taken together, the Quebec fast track, the federal money, that's a major de-risking event for the project.
Massive de-risking. And if you also remember, Matt, about 2 months ago at the G7, the project was endorsed under the G7 Resilience and Critical Minerals Alliance, and we got backing from the government of Denmark, 3 entities of the Italian government, the EU, Canada, and also Belgium was at the table. And that shows you that, this is no longer even a national priority, but it's now an international priority of the G7. This whole LFP battery supply chain is very important to the G7, and they see First Phosphate as holding, one of the keys to basically onshoring this LFP battery supply chain as soon as possible into the Western world.
Brilliant. Well, fingers crossed we can develop this very much needed LFP supply chain quickly.
Yes, and that's what we're working towards. First Phosphate is fully funded. We've got over $30 million in the bank as per our last financials, now access to over $20 million of contributions from the federal government. We're able to get through our feasibility study, our permitting, and our final investment decision, hopefully all in the span of 18 months here. So First Phosphate is working very hard, very diligent, and with the funding in place, it just gives tremendous ability to work quickly and not have to stop and go. Requiring capital. It brings a lot of security on our internal team and on our external team, and they are literally working day and night on accelerating this as quickly as possible.
John, and thanks very much for that summary. Just as a reminder, First Phosphate trades on the Toronto Canadian Stock Exchange, ticker symbol PHOS. It has about a 300 million market cap, currently trades at about $1.60, which is a bit below the $2 where it recently raised $17+ million in funding, but is also, a year ago, the stock was 47 cents. So it's tripled in the year since we've started bringing this story to our shareholders. But John, you keep knocking down these pins as you did with today's news, with great, government, local, federal, and international support. Just want to remind our viewers of your favorite saying, don't forget the P in LFP. And First Phosphate looks to be like the battery grade phosphate, the first battery grade phosphate story that you should be focused on. Thanks again, John.
Yeah, thank you very much, Howard. And you can also find us on the OTCQX under ticker symbol FRSPF.
FRSPF. All right. Excellent. Speak to you soon, John.